Welcome back to Stocklabs for another market recap, another bullish market recap. We're into June now, so post Memorial Day weekend, everybody's down the shore. There's nothing to worry about really with the market. Um, Everything went up again this week, so the leaders from a performance standpoint were slightly different than recent weeks, but IWM up 3.3% this week, and actually all of that came on Friday, I think. Same thing, Dow was up 2%, 2.2%, S&P up 1.9%, and the Qs lagged, only up 1.8%. This is the worst performance in a few weeks because, previous weeks we've been up in like the 2.5%, 3.5% performance per week. So, bulls will probably consider this a dip that the Qs were only up 1.8% for the week. Crude oil down 1%, so crude has no momentum. I mean, if it's up 1 week, it'll be down the next week, almost guaranteed at this point. Gold flat. Gold has backed off quite a bit. I mean, I think a lot of the economic data that has come in, it keeps beating to the upside. So, the precious metal kind of defensive trade takes a bit of a backseat when that's the case. Now, that should also mean that the rate hike probabilities should start ratcheting back up again, and the inflation metrics should start beating again. They beat last reading, so we'll see what that means for the market. But right now, nobody cares. Credit was up, bonds were also up, so pretty solid week for just risk assets in general. If we look at the leaders that have been carrying the market for the last several weeks, couple months at this point, they all did pretty well. So Tesla had 11% week to the upside, Netflix up 6, Meta up 4, Amazon up 3.5, Apple up 3, Nvidia only up 1.1, Microsoft almost up 1, so kind of an underperformance from them, and Google flat. So basically, bear market in Google right now, down 4 bips for the week. You can tell that these stocks are vastly outperforming the Nasdaq. They're outperforming everything. So this is the only group with any consistency that investors want right now. So I mean, don't overthink it. If we look at breadth by industry, you can see it was pretty good. This is probably the best breadth week we've had in several. There was some participation from a lot of the other industries, and basic materials, even though crude was flat and oil was down, basic materials still did pretty well, up 2.5%. Industrials up almost 3%. Healthcare even up 2%. Tech up 1.7%. So this is kind of in line with the Nasdaq for a change. We've been seeing big deviations between the Q's performance and the tech sector overall, but this is kind of in line. Okay, it's still underperformed slightly, but it's negligible difference. Utilities up also 1.8%. And financials up 1.9, consumer up 1.2. So, pretty strong across the board. From a subsector perspective, okay, there's not like chock full of sectors up over 5%, but we do have a handful. You see some of these regional banks are starting to, at least trade both directions. They're in the midst of a bit of a rally last couple weeks. And then on the downside, basically nothing. So whole market lifted up and down the spectrum of industries. So if we go into breadth by market cap, the 5 billion cap range. I have to remove some splits. Okay, up 3.5% for 1 to 5 billion, and 5 to 10 billion, 2.7, pretty good. 10 to 50 billion, up 2.3. 50 to 100, up 1.75, and the Terra caps up 1.4. So pretty good. I mean, solid breadth across the board. Like I said just a minute ago, basically everything lifted. I think NASDAQ was up every day of the week. Maybe it was down one day, but it more or less went straight up. Same with the S&P. IWM was trading kind of back and forth, but then just had an enormous Friday that kind of just shot it up into the lead performance-wise. So, yeah, it's a bit curious to see like the big IWM rally on Friday, but like I said, economic data has been beating, so maybe some of the stuff that's non-tech and a little more economically sensitive could start, I don't know, doing something other than what it's been doing. One other thing, we are very close to being overbought on the market. So you can see this is the highest level basically since February. We had a big kind of cluster of overbought signals middle of January right into February. Now, these didn't really produce any giant pullback. These kind of hit when we were coming way off the lows with some force. So if you can remember that far back, the market closed 2022 basically on more or less on around the lows for the year. So then the new year started and blasted off. We got like a handful of overbought signals. So we'll see if we kind of register one this week. We do have it on 3-month, but you can see like the threshold for hitting overbought has come way down. The 6-month one hasn't changed all that much. So this will be kind of the true test of the market being overbought. We'll see how it kind of performs from there. But overall, I mean, more or less another week of crushing the VIX. The summer trading has really set in now. So all the existing trends that have taken place, so far you can kind of just expect them to continue for at least, while everyone is on vacation and all of this stuff like that. The market is not going to, even if it pulls back some, it's not going to completely fall out of bed. I kind of mentioned that when we were approaching this sort of seasonal period, but yeah, is what it is. So market looks like it's on solid footing. Recession fears basically gone. We'll see if the Fed starts talking a bunch of trash again and whatever they like to do. I mean, they kind of like to talk down the market whenever it starts blasting off again, because I don't know, they just don't want to seem like they're just letting everything run wild, even though they're doing a pretty good job managing the whole situation, but they kind of want to keep people in check. So yeah, that's all from me. Hope you guys have a good week, and we'll be back next week to see how it all went. Talk to you later. Bye.